Welcome to another episode of the Federal Church Presents Better Than Bloomberg, covering the 2023 global financial market collapse, global financial system collapse, the worst ever. It's another note, this one's from Bloomberg Stain. Apparently they have macro strategies, but essentially the note touches on, most of it's kind of bullshit. The most important part is the monetary velocity that will crumble in the dipshit trade. The results of the dipshit trade. And that'll translate into eventually millions of these degenerates in poverty sooner than they think. But the collapse of SVB, and again, I just did a few videos on how the Eurozone is fucked. I guarantee you the retards in America are fucked even more. Like I said, they'll be like fucking Mexicans. They'll be poorer than Mexicans in the next few years. Them in the third world are pretty much screwed. The collapse of SVB and the turmoil at Credit Suisse will turbocharge the effects of QT, sealing the case for a U.S. recession. Remains underpriced by equity and credit markets. Let's say those equity and credit markets are going to be tanking. Pretty fucking bad. I mean, just the level of dipshit. The ubiquitousness of the dipshit. That'll be tanking. Remember QT to misquote Dirty Harry and all this excitement. It's easy to lose track of what's going on. But QT's effects are now likely to accelerate as banking stress causes a steeper fall in bank reserves, tipping the economy into a potentially deep recession. I would say the worst economic crisis that it's ever seen. Dipshit is that widespread. The Fed is therefore now more likely to end QT and rate hiking cycle early. Again, it looks like they're going to be raising at least 25 basis points because, well, it's dipshit. It's not the Fed's fault. Those people were that fucking retarded. It will not be enough, however, to save credit and equities, which are materially underpriced in an economic slump. Which, don't forget, bondholders and equity holders are O's. The only thing being covered are deposits. And even that, they're writing checks they can't cash. The key to understanding QT is that it's both a duration and velocity transformation. Well, duration. I mean, you shouldn't even talk about duration because in time, as time goes on, you're more screwed with inflation. So, velocity transformation will probably be more important. The Fed gives back duration to the market through asset sales and redemptions and takes up velocity as it absorbs reserves. While they're printing trillions of fucking dollars. They're not giving you back duration. Falling velocity leads to lower inflation, but to get there, the market's interest rate risk rises. Just don't risk it. You know it's going up, whether the Fed likes it or not. As it takes back duration from the Fed, SVB is the most dramatic casualty of this effect so far. Credit Suisse also bearing the impact. Again, we know Credit Suisse has been fucking problematic with their trading and some of their businesses because of affirmative action. Sentiment was eviscerated Wednesday as its shares tanked and has been partially restored today as the bank gained access to a liquidity facility at the S&P. Which, brings up another point too. I was mentioning Deutsche Bank earlier. Deutsche Bank was already teetering on the edge. Had a little bit of some affirmative action fucking problems. And the S0 hedge can put that up too. Because I'm almost sure there's some dipshit there. And even if there wasn't, there's still that counterparty. Somebody's going to be paying for it. It's both plain vanilla or fucking goddamn derivatives trades. Nonetheless, there's a real risk that lingering concern around bank banks can lead to a large migration of bank deposits into money. This is fucking loud because of the dipshit, which is, the inflation and the rates. Many will have woken up to the much higher rates on offer in real terms. Doesn't work. Even in the bailout administration corporation's decision to make all depositors in SVB whole, deposits could migrate from smaller regional banks, likely more risky with greater relative exposure to less liquid assets such as commercial real estate, direct into money market funds, especially if larger banks are slow to raise their deposit rates. Again, this is an older note, so they're basically guaranteeing deposits, even though they're writing checks and they can't cash. But foreign bank deposits should still be the case because the banks are still insolvent, even if they have some supposed liquidity behind it. Their underlying reserves are still, their reserves, are still insolvent, and will only get worse over time. Falling bank deposits will lead to less high-powered money, i.e. bank reserves in the system, which means considerably tighter financial conditions, which will mean the economic contractions, the layoffs, the less money in the system, more people impoverished, etc. That would be the final straw for an economy that was already highly likely to enter a recession as soon as and again, it's already teetering on the edge. The trickle has already begun, with bank deposits falling since last summer, almost by the same amount as banks' holdings of treasuries and agency securities have declined. This is because banks have on net been selling their securities to non-banks, meaning a reduction in total bank deposits. And again, they're just playing the fucking, cook the book scheme now, where people migrate their deposits to the bigger banks, and then the bigger banks just recycle it into the smaller banks, and it just on their books it says, oh, we have no depositors, and we have a shitload of tons of debt. Which, why would you fucking need the banks now? Because their whole entire purpose, again, they're only depository institutions, and they couldn't fucking do that right. You should expect this trend to continue. The chart below shows that banks typically reduce their treasury holdings as a percentage of assets as the Fed raises rates, the ratio falling before and troughing during a recession. Again, you should probably expect that shit to plummet. How the fucking shit hasn't gone to zero now. I can only say from the bullshitting, the hopium, and, people just not realizing how much of a fucking clusterfuck they're in. But again, dipshits. This trend could now be magnified as yield-seeking deposit holders, or even those who just don't want to be around if they think bank issues will become systemic. Again, this isn't that concept of contagion, or in one bank and whatever, well, I guess in a sense it is that part, because they have the counterparty to the hedges, but, this isn't in the sense of Lehman, or whatever the MBS bullshit in 2008. It's that they were dipshits, their bank will go under, and then they'll screw up all the other, the other derivatives, and then especially, even if they were hedged, there'll still be somebody else paying for it. So, it was just that there was a system of dipshits. Take their deposits out of the banking system, reducing bank reserves further. As the tide of deposits, and again, some forward guidance from the Fed Church there. Move it onto the blockchain. As the tide of deposits leaving banks for MMFs rises, higher velocity bank reserves are likely to fall more sharply. Total assets and money market funds have climbed more than $400 billion since the summer. Which again, the dipshit. Almost exactly the same as bank deposits have fallen in the same period in March 3. Again, money market funds are actually more volatile to that because it's all based on rates. And we shouldn't expect susceptible, not volatile, but susceptible to that because it's based on the rates. And we shouldn't expect bank lending to countervail the falling deposits. Thus far, banks have allowed their loan-to-deposit ratios to rise, and bank balance sheets have barely shrunk despite the loss of deposits. And the banks are insolvent. This is unlikely to persist as banks continue to tighten their lending standards, which invariably leads to fewer loans being made overall. Outright bank balance sheet contraction represents a powerful headwind which the economy has not yet had to contend with in this cycle. QT's second goal, reducing velocity, has thus been absent. This was indicated by the yield curve's relentless flattening. But now, again, it's fucking laughable because in real terms, it's so fucking bad with inflation that it's almost fucking a moot point. But it absolutely is going to be reducing velocity. But now, as shorter-term yields drop as crisis fever grips, steepening is in play with the vengeance. This will lead to a fall in velocity and some easing in inflation. It's not going to lead to an easing in inflation because they're still printing trillions of dollars. But there will be a fall in velocity. One of the beautiful parts of stagflation. And yet the drop in velocity is likely to be too violent for the economy to avoid a recession or face more upheaval in the financial sector. That's the dipshit, and then some. The odds have now risen that the Fed steps back early from its hiking cycle, even with the March hike of 25 basis points in the balance, which I guess we'll see soon. QT is also very likely to see a phase of premature end, especially when they're printing a couple $1 trillion. Pace of reserve depletion quickens. As of Thursday morning, the S&P is only 4% lower than its March high. I expect that to change very soon. Much soon. In a much faster time. But a much deeper sell-off lies ahead as recession risks rise materially. Of course, gamma in the S&P has recently shifted into negative territory, meaning market moves, especially the downside, prone to be exacerbated by the option dealers hedging. Dipshit. Rate rises in QT are showing that, you see how much there's the intertangling there with the dipshit. Rate rises in QT are showing that reversing years of zero interest rates and large central bank balance sheets will be fraught with difficulty. No, the system is collapsing now, and it absolutely should. You can't just keep printing trillions of fucking worthless fucking dollars. There was a gold standard at one point in the world. This has never worked in history. Not fucking once. It wasn't going to be working this time. Especially with all those dipshits. But again, don't forget to donate, because your donation is your salvation. The Jesus is watching you.